Set your own rules and stick to them. Never argue with the market, never make a play you can't afford, never give way to irrational exuberance. Above all, don't be a sucker. Jesse Livermore. Jesse Livermore's How to Trade in Stocks is not just a guide to the technical aspects of stock trading. It is a deeply personal account of the principles and philosophies that guided one of history's most successful and enigmatic traders. Livermore, who earned and lost several fortunes during his career, offers readers a blend of practical advice, psychological insights, and vivid anecdotes that bring the complexities of stock trading to life. Livermore begins the book by emphasizing the importance of market timing, a theme that recurs throughout the text. He views the market as a living entity, subject to cycles and trends that, while not always predictable, can be understood and anticipated by those who are observant and patient. Livermore likens the stock market to the ocean, with its tides and waves that rise and fall in patterns. To him, the key to successful trading lies in learning to ride these waves rather than trying to force the market in a direction it isn't naturally inclined to go. One of the most striking aspects of Livermore's approach is his resilience on what he calls the follow-the-leader strategy. Rather than trying to predict which stocks would suddenly rise, Livermore focused on identifying the leading stocks in a bullish market, those that had already proven themselves resilient and strong. For instance, during the booming 1920s, he closely watched companies like General Motors and RCA, recognizing that these industrial giants were riding the wave of technological and industrial innovation. By following these leaders, he was able to capitalize on the broader trends driving the market, rather than gambling on less certain prospects. A particularly vivid anecdote Livermore shares is his experience leading up to the stock market crash of 1929. By this time, he had already made and lost several fortunes, learning the hard way that the market is a fickle beast. In the months leading up to the crash, Livermore observed a growing disconnect between stock prices and the underlying economic realities. He noticed that prices were climbing rapidly, driven more by speculation and irrational exuberance than by solid fundamentals. Drawing on his understanding of market cycles and his own experiences, Livermore began shorting the market, betting that prices would soon fall. This decision was not easy. Livermore describes the psychological pressure of going against the crowd, of watching as others continued to buy into the seemingly endless rise. But he held firm to his convictions, and when the crash finally came, he was one of the few who profited enormously from the disaster. This story not only underscores the importance of market timing, but also highlights Livermore's belief in the necessity of emotional control. It takes immense discipline to stand firm in the face of overwhelming pressure, and this ability to maintain composure under stress is, according to Livermore, what separates successful traders from those who are ultimately ruined. Another key principle that Livermore emphasizes is patience. Unlike many traders who feel the need to be constantly active in the market, Livermore advocates for a more measured approach. He believed that there were times when the best course of action was to do nothing at all, to simply observe the market and wait for the right opportunity to present itself. This philosophy is encapsulated in his strategy of pivotal point trading. Livermore would identify key price levels, what he called pivotal points, where a stock was likely to make a significant move either up or down. He would then wait for the stock to reach one of these points before making his move, whether that meant buying or selling. For example, Livermore recounts how he used this strategy during the early stages of his career when he was trading in bucket shops, essentially betting parlors for stocks. He would sit for hours, sometimes days, watching the ticker tape, waiting for a stock to hit a pivotal point before placing his bet. This patience paid off, allowing him to make significant profits with relatively low risk. Livermore's approach stands in stark contrast to the frenetic, high-volume trading that many associate with stock market success. Instead, he advocates for a more deliberate, thoughtful approach, one that prioritizes quality over quantity. Livermore also delves deeply into the psychology of trading, which he believes is just as important as understanding the technical aspects of the market. He argues that the greatest challenge any trader faces is not the market itself, but their own emotions. Fear and greed, he warns, are the twin enemies of successful trading. Livermore was intimately familiar with these emotions, having experienced both the euphoria of making millions and the despair of losing everything. Before we continue, please don't forget to click the like and subscribe button if you've enjoyed this summary so far. If you're considering grabbing a copy for yourself, click the link in the description for more info. One of the most poignant examples he shares is the story of his massive loss in 1915. At the time, Livermore had made a substantial fortune and was riding high on his success, but his overconfidence led him to make a series of poor decisions, culminating in a devastating loss that wiped out his entire fortune. This experience was a turning point for Livermore. Rather than giving up, he used the experience as a learning opportunity, refining his strategies and, perhaps more importantly, his mental approach to trading. Livermore learned that success in the stock market requires not just technical skill, but also emotional resilience, the ability to recover from setbacks and keep moving forward. In addition to these psychological insights, Livermore provides readers with practical advice on how to analyze stocks. He was a pioneer in the use of technical analysis, relying heavily on charts, patterns, and price movements to guide his decisions. Livermore believed that the stock market was a reflection of human nature, with all its irrationalities and inconsistencies. By studying the patterns in price movements, he believed that one could anticipate future trends and make informed trading decisions. For instance, Livermore was a master of tape reading, a technique that involved studying the ticker tape to identify trends and anomalies. He would meticulously analyze the flow of prices, looking for clues that might indicate a shift in market sentiment. One of his key insights was the importance of volume. He believed that significant price movements were often preceded by changes in trading volume. By paying close attention to these details, Livermore was able to stay ahead of the market, making informed decisions based on the data at hand. Money management is another critical aspect of trading that Livermore addresses in his book. He warns against the dangers of over-leveraging and putting all one's capital into a single trade. Instead, Livermore advocates for a more conservative approach, one that prioritizes the preservation of capital above all else. He believed that no matter how promising a trade might seem, it is crucial to always have a portion of one's capital in reserve, both to protect against unexpected losses and to take advantage of future opportunities. Livermore shares several examples of how this principle saved him from financial ruin. For instance, during his early years of trading, he made a habit of setting aside a portion of his profits in a separate account, untouched by his day-to-day trading activities. This emergency fund proved invaluable on several occasions when the market turned against him, allowing him to stay afloat during difficult times and giving him the confidence to continue trading. Throughout the book, Livermore's tone is both humble and authoritative. He does not shy away from discussing his failures. Indeed, he often emphasizes them, using them as teaching moments for his readers. Livermore's willingness to share his mistakes as well as his successes makes the book not only informative but also deeply relatable. He comes across not as an infallible guru, but as a seasoned trader who has learned through experience and is eager to share his hard-earned wisdom with others. In conclusion, How to Trade in Stocks is far more than a simple trading manual. It is a reflection of Jesse Livermore's journey as a trader, filled with insights that are as relevant today as they were in his time. Livermore's emphasis on market timing, patience, emotional control, technical analysis, and money management provides readers with a comprehensive guide to stock trading. But perhaps more importantly, his stories of triumph and failure offer valuable lessons in resilience, discipline, and the importance of always learning from one's experiences. Whether you are a seasoned trader or a novice, this book offers timeless wisdom that can help you navigate the unpredictable waters of the stock market. For more tips on financial mastery, stick around for beneficial book summary on Secrets of the Millionaire Mind by T. Harv Eker. Enjoy!